Good evening, midday, morning, wherever you are in the world. It's not always too easy to know when we're running those webinars where you're dialing in from. So maybe you could even pop that into the chat. We like having that chat going when we're doing our webinars. But most of all, welcome everyone. If you haven't met me before, I'm Camilla Bullock, and I have the pleasure to run the Emerging Payments Association Asia. And EPAA sits really in the intersection of innovation in the payments industry. We have a vision of improving lives everywhere through payments, and never have that mission been as important as now, because it feels like everything is changing around us from day to day, week to week, and this topic specifically. So today we're here to talk about agentic AI and how it will reshape payments. And I was asked early February by our friends at GFTN when they ran the GFTN forum in Tokyo what topic I would like to have a roundtable on. And I showed agentic AI. And we unpacked a use case of a Japanese family using agentic AI for their payments in different scenarios. They were paying bill, they had subscription, they were looking for a trip, the usual use case we always hear about. They did not buy shoes. But what we did in a room of 20 payments leaders was to unpack how such a payment would travel and what would happen if something went wrong. And I'm not going to talk too much about that because it's already several months ago. But what I want to say is we hosted another roundtable just a couple of weeks ago on the same topic. And the understanding and the questions in the room had evolved so much on 3 months. And that's why it's so important to come together. And hence, we have chosen the best of panels for you today. We will introduce them in just a little bit. But I specifically want to do a shout out to Sonia from IMF, because heading to that most recent roundtable, I was on a flight, and I always go on the flight with lots of white papers so that I could figure out what has the latest things happened. And I got the one written by Sonia, and it's a fantastic white paper. And it really changed how I asked some of the questions when I moderated that. So thank you, Sonia, for that. And even more so, thank you for then later on my WhatsApp message agreeing to coming and unpacking the topic together with Monica from APA, and we have Andrea from Monash University, Maylan from AP Plus, and Maxime from Google Cloud. But I want to let everybody know, let everybody log on and share where you are from. Use that chat through the session. But today is not just a discussion to enlighten you. It's also a discussion to enlighten ourselves, because in 5.5 weeks' time, we will host EPA Connect. EPA Connect is the first time when we're bringing our members together, stakeholders and policymakers in the region. It will be 200 payments leaders that comes together to look at topics that we're already developing and discussing in our working group. So as you can see on this slide, there will be 6 roundtable working shops that are led by our working group leaders and our ambassadors. And we will also host the SWIFT Policy Lab together with our friends at SWIFT. So we'll be a day full of discussions. Nobody's there to listen. Everybody's there to contribute and then take something away. We created this to have action. And then we bring everything back together into our working groups and developing what we call products for the end of the year. Either that is white papers, toolkit, best practice, taxonomy, definitions, things that we think the industry need to act on opportunities and challenges. So if you feel that you are a payments leader that are influencing the future of payments, attend. If you feel that you're working for one of the most innovative organizations out there, also scan that QR code and apply to attend. But I've probably taken my 5 minutes already. So let's introduce the panel for today, who's going to take us through this hot topic. Monica, over to you.
Thank you so much, Camilla. I'm really excited for this topic and to have this trending panel. to actually talk to us about it. What we will do next is probably just maybe spend 1 or 2 minutes with every speaker, giving us a small 20 to 30-second intro about themselves and why this topic is most relevant to them. Actually, starting with Sonia, who's actually written this paper, which is a foundational basis of why we are here. Over to you, Sonia.
Hello, everyone. My name is Sonia Davidovich. I'm a senior digital expert at the International Monetary Fund in Washington, D.C., and I work on digital assets, cross-border payments, and agentic AI and payments. Good to be here. Thank you for the invitation.
Thank you, Sonia. Next, Professor Andreas.
My name is Andreas Steppler. I'm a professor at Monash University. I'm based in Kuala Lumpur, but I'm also the co-director of the FinTech Lab at Monash, which is a collaboration between the School of Business and the Faculty of IT in Australia. And because of that, we are looking at payments and at also blockchain and decentralized finance, both from a non-technical governance angle, but also from a technical angle.
Thank you, Professor Andreas. May.
Hi everyone, my name is May Lam. I'm the Chief Information Officer at Australian Payment Plus. So AP Plus is the domestic payment operator sitting in Australia. We provide the debit network, the secure bill payment, and also the real-time payment. I'm also the chair of the advisory board to EPAA as well. Thanks so much for having me, and I'm very excited to have this conversation.
So much, and then Maxim.
Hi everyone, I'm glad to be here. I'm heading financial services at Google Cloud for Asia Pacific and Japan. My team is a bridge between Google's innovation and the real world business problems. And I'm also part of a cross-functional team at Google who is in charge of AB2 and UCP. And before joining Google Cloud 4 years ago, I have been in industry for 20 plus years and excited to be here.
Thank you so much. So let's actually begin. So I'm going to go head over right to Sonia first. Sonia, the paper actually addresses at the collision that is possible or actually imminent between probabilistic AI decision making and deterministic requirements of payment infrastructure. I really like how the paper actually broke down, especially the risks, which currently have not been flagged, and I'm sure it has been flagged, but not so much attention is paid to it. And the paper actually focuses not just on the risk, but also on certain solutions that might be possible and we expect will happen. So if you could tell us the origination of the paper, what, and of course help the audience understand what led to this paper and what it actually contains, that would be awesome to set the scene, and then we will begin our discussion. Over to you.
Thank you very much, Monica. So the paper is naturally something we do within the digital advisory unit. This is part of the IT department within the IMF. So we're exploring how transformative technologies influence our membership, or which repercussions, potential implications the use of these technologies have on financial stability, on the economy at large, and in general, everything that is squarely within the IMF mandate. And so we noticed that there have been a lot of activity, especially in the e-commerce space, when it comes to the use of agents to manage the entire purchase cycle. And we thought it is an interesting development that we should look into closer. And then as we were investigating the topic, we realized that there's many more use cases that we should be exploring in addition to just agentic AI and e-commerce. So the paper is looking at the use cases that I just mentioned. So one being e-commerce, then cross-border payments, and in that context, the management optimizing the payment routes, picking the right payment rail, optimizing liquidity, but also in general, more general treasury and liquidity management for optimizing liquidity or liquidity in bank and regular transactions. And then finally, for fraud detection, it's an area that agentic AI can really contribute to, as it can detect anomalies and suspicious transactions and flag them to supervisors and policymakers that are in charge of overseeing the payment systems and the functioning or the proper functioning of these payment systems. So while we look at the use cases, we also suggest that we find that there are still a lot of, in addition to the benefits we've identified, there's still a lot of risks that need to be properly mitigated or managed to reap the most benefits of these technologies. And so the paper suggests a way to how to deal with like a fundamental collision between the probabilistic nature of agentic AI systems and the extremely deterministic nature of payment systems. I think that's at the core of the paper, identifying that is a collision that is inevitably going to create lots of challenges for the merger, the proper synergy between these two systems. So we are proposing in the paper a three-layer model that will help remedy this core collision that exists there. And that is sort of the centerpiece of the paper. And the three-layer model basically separates the intent layer, so the initial research of a purchase or a liquidity operation, from the authorization layer, meaning the actual authorization of the specific transaction or the specific purchase, whatever the case may be. We think that it's extremely important to separate these two. And then finally, the settlement layer itself, where the transaction is settled, has to remain deterministic at all times, and hence it's the third layer within that framework, within that model that we're proposing. We're also giving suggestions as to how to manage the residual risks. We do see that there is a lot more thought needed on how to structure a proper governance framework around the integration of these two systems. It has to have proper authorization, delegation, accountability frameworks. Cybersecurity is a big issue, as there's a lot higher or a lot larger surface attack that is being exposed, including agents gaining access to payment credentials. We also identify risks that are basically related to financial stability, because as agents, and I would say an army of agents, or potentially thousands of agents, all pick up on the same market signals, they might actually increase volatility and have adverse effects on financial stability. So, that is, I think, one area that is still currently underappreciated in terms of how to deal with that. So we then proceed with suggesting risk mitigation measures, and that is like robust governance frameworks that need to be in place. The three-layer framework, or the three-layer model I just mentioned, is one risk mitigant, as it separates intention from authorization. And for high risk or high value transaction, there should, we believe, still be a human in the loop, or on the loop, as we like to say. And then finally, there has to be thought given to how to mitigate financial stability risk, meaning to equip supervisors and regulators with the proper tools to nip those initial volatility as it appears in the bud, and make sure that these market signals that agents are picking up on are properly contained within a reasonable regulatory parameter.
So much, Sonia. What I really liked about this paper was that you made it very clear, along with the other authors, about that AI is not something new; it's existed, and I really liked how the breakdown of the models was able to help us understand where exactly the technology is leading to. And however, I want to bring in Professor Andreas here as well. I do understand that Monash has also published a similar paper, but on I would think, convergent design, but of a 4-layer model. And your thoughts on the paper when you read it, and any comments that you might have before we dive in?
Actually, the paper that we wrote is quite different. It's an academic paper, and we look at agent-to-agent interactions through blockchain. And we argue in this paper that certain aspects of the agent-to-agent ecosystem have not yet been fully investigated, especially interoperability, trust, security challenges. So we are proposing a systematization of blockchain-based A2A payments, including a 4-stage life cycle, discovery, authorization, execution, and accounting. It's a different framework from the 3 layers that are proposed by the IMF, but I think it's the first step really at understanding agents-to-agent payments through blockchain. The paper is available as a preprint, and it's also been accepted by a conference, a blockchain conference, and it will be presented next month in Italy at the conference.
Thank you so much, Professor Andres, and thank you, Dan, for sharing all these links in the chat. So whoever is available in the chat, please keep your questions ready. We are happy to look at these questions and address them to the panel. But I just want to take quick comments from May and Maxim before we actually dive in. May or Maxim, anything you would like to add before we move into the questions?
No, I think I really like the paper as well. I liked how we break down into the layers and actually giving the more perspective, because payment is not just initiation. It has to cater for the whole value chain of that. And happy to unpack further what that means from the payment rail and what's the operational risk as well. Yeah.
Thank you, May. Maxim?
Yeah, I think it was a very great. Both papers are fantastic, and indeed, agentic payments adoption opens up a lot of questions which go beyond just technology and the payments. The questions become, okay, how the whole economy will be changing because of that. Really like that Sonia in the paper have highlighted one of the risks which are amplifying today, which is okay, financial stability. And there are lots of other risks which typically fall into the hands of the researchers, regulators, which needs to be evaluated. And it's fantastic to hear that lots of work is happening on this. I am personally myself is working also besides my regular day-to-day job with academia, with Stanford here in the US on the research on how the agentic payments is going to be changing the economy. That's fantastic to hear that broad research community.
Thank you so much, Maxim. We'll actually dive into exactly that, because I think the one thing that we would love to unwrap is from the infrastructure and platform perspective, what really needs to change for agentic or agent-initiated transactions so that they can be processed at scale for billions, in not just billions of transactions, but also millions of users as well as merchants. What is the capability that needs to exist so that this particular capability can scale up with the systems that exist today, not with new rails, not with new tech, but with the existing systems? And if I can go to you, May, with your background, excellent background, and of course, resilience in payment system, which is something we're still dealing with. How do you expect this new technology and new initiation method to actually change what we have?
Yeah, thank you. Thank you. So before I start, I just want to address some of the characteristic today. Payment is a network asset. So it's not just from the rail, from the scheme operator, from the core perspective. The change need to have the ecosystem to come with it, because everything, let's say the system is working in the center, doesn't necessarily mean the experience from the end user perspective is working seamlessly. So one is, it is a network asset. It have the different legs to get to what the means of it, whether it's to pay or get paid. The second thing is that there's an advantage in terms of payment. The payment messages is getting more rich, and increasingly through ISO 20022, for example, it has a lot of possibility to embed different data that where is needed. So that's a good characteristic. And then I think the third one is that the increasing geopolitical conflict and challenges, and I think the payment can become or has become a weapon from the industry perspective. And that's bring up to the sovereignty. The sovereignty of the payment asset is critical. So just keep in mind these three characteristics when I explain what needs to be changed. So first of all, from the rails, so operational resilience, operational risk is now we can see a lot of jurisdiction, not just Australia, that the regulator is looking through to understand what's a third party, what's a fourth party. So when they come to agent, do we treat them as a third or the fourth party? I think that is still under debate or emerge. So that from the rail itself, I think the rails themselves are not the biggest challenge. The go back to Sonia's paper is one thing that we have to look at is from the settlement perspective, the settlement layers. Can we enrich the data, the payment data, to ensure that there's another human on the loop or there's another queue switch before it being settled? So when they come to real-time payment, yeah, it can be real time, it can be fast, but I think the question is now, should it be? Or under what circumstances? So I think that is one of the things, the rules may need to assess from the rails and leveraging the data and rich data to ensure that there's a queue switch before it being settled. I think the biggest challenge is on top of that. So referencing the two layers that Sonia's paper outlined, the orchestration, the experiences, how people build on innovate on top of this infrastructure. That's one challenge. And the second one is that the control. So what are the control assumptions today that we have with the risk that we as payments is because it has been deterministic. And all the rules around the governance around is built based on the deterministic characteristic. So the risk has emerged. Talk about liquidity, talk about the financial stability. The correlated risk has not really exist in the past, and now we have to address that. So from that control perspective is critical. So before get to Maxim's point in terms of Google perspective, for example, referencing AP2, how can the domestic payment or capability remain open, not being locked out? I think that is key because once being locked out, there's a sovereignty, the asset will diminish. So I think the changes is not necessarily just on the rail, it's the whole operation, whole value chain perspective. I think as to before it become, I think personally I would have time before it become fully autonomous. So using this time or using transition, I think three things that we need to change. Not necessarily capability, but it's almost the control and how we measure. One is about the identity. So do we have the authentication authority? Do we understand what are the identity of that agent? And then I think the second one that we have to address is about the behavioral governance of those agents, because that can become the correlated risks that outlined in Sonia's paper. And then I think the third one that we have to look through is that the who actually have the accountability. From the regulation perspective, from the user perspective, from the ecosystem, everything back to the point about payment is a network asset. So who plays what role in that value chain should be accountable for that. So I would say that it's not necessarily the technical capability that need to change, is that what build on the infrastructure, the control, the orchestration, and the experience layers need to change. Cover us up there.
That is brilliant. Absolutely, that is absolutely brilliant. We'll be coming to the governance and accountability aspects in just a little bit, but I want Maxim to actually comment on this, because a lot of what is being said right now, specifically by May, is something that Google is building out. Now, not from an ecosystem perspective, if a player listens in, what is it that we should derive about the agentic capabilities, both in terms of the commerce search as well as in terms of commerce enablement that Google is building out? And how do you see trust and authorization layer playing out in this particular scenario?
So it's actually handling the agentic payments and overall agentic commerce. It's a joint effort. It's a coordinated effort. If it comes to the technology industry, like companies like Google, it's about building open protocols such as AP2, agentic architectures, real-time validation agents, the agents for authentication of the agents, validations of the agents, while it's at the same time getting and working with the payment industry, and we do this a lot with many of the players. For the payment industry, actually to mature its capabilities in terms of tokenization, in establishing know your agent verifications, and adapt various fraud mitigation networks and techniques to settle and like authorize and settle autonomous transactions. It's also the efforts which coming from the academia and the questions such as financial stability, which Sonia has highlighted in the paper, or another question which is continuing is loyalty of the AI agents. So when the people start adopting AI agents, actually who has created them, whom they are loyal. So all these questions still require coordinated efforts to answer, and to answer quickly. Because adoption of agentic payments is happening at the moment exponentially.
Actually, that is the one question I do have, because and I would love to address it to and this question is open to everyone. There are so many of these protocols being developed, and we've spoken about interoperability in the payment system layer, which is still something that we keep debating and discussing about, to have the network effects that it is required to even being able to cater to more billions of people. But when it comes to agentic commerce, this paper does a massively great job of actually providing the capabilities side by side. So the comparison is really amazing. But my question to you is like, how do we ensure, and may raise this very important point about systems not getting locked out because of what is being built. So we have to innovate on top of it. There are enough players in the market who will do that to create the impact that is required in terms of scale. But how do we ensure that interoperability is at the essence of this? Or do we expect that interoperability will become a priority at a certainly later point in time where the systems have progressed to agentic commerce as a protocol? And what are your thoughts around it?
Okay.
If I could go to Sonia. Sure. Please go ahead.
Maybe just to actually, if we take about AP2, it's already open source protocol. So Google has created it, and it has been donated to the FIDO Association, so for the community to manage it.
So do we expect that the standards organizations will come in terms of being able to standardize both the interfaces as well as the open nature for everybody to be able to innovate on top of that? Would that be a fair assessment?
Yep, it is already happening.
Yeah, I think that
Sonia, would you?
Sorry,
me go ahead.
No, so I just want to add on what Maxine says. So yeah, it definitely is open. Another thing that I think we can provide more interoperability is that the tokenization technology, the solution. How can that be having maybe a master token or token vote so that it can be interoperable? Whoever the player came to these markets, there's someone that is holding that token vote, the token vote, so that we are not in the token, like, because at the moment I think that in what's happening before the agentic commerce is that there's so many tokens, so we have so many digital twins of the payment methods. Like tokenized on the website, tokenized on the wallet, tokenized on the phone, sorry, on the watch, etc. So I think that there's an opportunity to understand how can we leverage this technology to provide stats interoperability, and it's not being locked out. Yeah. So I think that's something that's as an industry or innovator should like looking at how can we collaborate together more.
Absolutely. Sonia, would you like to comment on this as well?
I think that I see a lot of potential, and the paper calls it out, the integration of stablecoins with agentic AI and payments for cross-border payments specifically. And I think that there's a lot more potential in terms of defining or mapping smart contracts that underlie stablecoins to specific agents that are executing the transaction. I mean, this is very early stages, but I do envision that we could have some sort of way to ensure that the smart contract includes defining parameters that will allow the agent to execute specific transactions based on parameters that have been defined within the smart contract. So let's say the rule is the agent can transfer a stable coin from Singapore to Malaysia for the payment of such and such within a specific price range on behalf of a specific entity within a specific time period. So I think this is very powerful because in that moment we kind of link up the programmability of digital assets, stablecoins, or payments in general, I would say, with the agentic AI capabilities that these systems bring. So that is something that definitely needs a lot more attention, because there has to be a uniform way of how these agents are picking up the parameters or the criteria that they will be acting upon. So it's basically standardizing the way how smart contracts are used to initiate and help execute a transaction on behalf of entities via agents. This is more a technical standardization effort rather than a regulatory one. Mind you, I should say that we do need and I can't emphasize that enough, proper accountability and governance frameworks, and that is part of the legal and regulatory harmonization efforts that will be picked up by the regulatory bodies within the jurisdictions that are having to deal with that, the standard setting bodies at the international level and the regulators at the national level.
Absolutely. And we'll be coming to that in the next section. But I just want to go now and switch gears a little bit, because the paper talks about the shift from KYC to KYE. And there is a lot of discussion as well as, I think, noise around what that framework is likely to be, who is going to manage the agents, the governance and the process around it, and the accountability. But in terms of just the framework and what we are coming to in terms of the transition, I would love to get your view, Sonia, starting with you and then going to the rest of the panelists. What does it actually require structurally? And if we could get an idea of which institutions or practices are best required in order to make this win and make this transition a little bit easier.
Sure. So I do think that we're moving in a direction of verifiable agent identity that has to exist. So agents must have persistent, cryptographically verifiable identities that are explicitly linked to a legal entity, or it could be a person or a body or a firm, whatever the case may be. But there has to be somebody in the analog world, if I may use that analogy, that holds that agent or has that agent accountable for their actions. So I'd like to also add that I don't think this replaces KYC, so know your customer, but it complements KYC as it exists now. So KYC would be for the principal, for the firm, or the individual that owns the agent, and then KYA would be the agent that is acting on behalf of that individual or that firm. So, and I don't want, at the risk of repeating myself, but there has to be a mandate and authority verification. This is very important. Who allowed the agent to act? I think Maxim used the expression, who is the agent loyal to? But that is very important. Like, is the agent authorized to execute a specific action within the defined parameters, the limits that this agent was given? So if it was designed for a specific purpose, is it not exceeding that purpose? And then it seems like that, there's an emerging proposal to point to a shared authorization or registry layer that has an ability to validate delegation across institutions. But that is very early stages. So, we should give that space a bit more attention. And then I think what is also important is to have this concept of embedded compliance and real-time supervision within the agentic AI system. So the compliance logic is embedded at the point of decision. So the agents are just enforcing the rules, like whatever the rules may be of a jurisdiction. So they're fulfilling the regulatory requirements in real time rather than after the fact, ex post. This is very important because it allows like supervisors and regulators to monitor their behavior, and specifically from the vantage point of preempting financial stability, that point is very important. So we have also talked about auditability and explainability, traceability in the paper, which I think is important. So agents have to be logged, explainable, and attributable. So this is important because there cannot be a case where we, as supervisors, don't understand what an agent has performed, which action or which transaction. And this is quite important in cases of dispute resolution or ex post supervision. Clearly defined traceability and explainability of their actions. And then, of course, proper, robust governance frameworks and accountability rules, like if agents are acting out, like what are the mechanisms to kind of reel them back in? Like, are there any circuit breakers, or are there any other mechanisms to kind of stop that malicious behavior or unauthorized behavior, I would say. So KYA, like know your agent, just kind of sits at the intersection of technical identity, the legal mandate, and the risk governance. Is quite important, and I think the paper calls that out. As to who should own KYA, that's a good question. I think it's not there's no clear-cut, easy answer to this. I think it's inherently multi-layered because ownership is distributed, across the entities that or individuals that own those agents. So we have the private sector that has a primary operational ownership. So bank and PSPs, payment system providers, they can anchor the KYA by doing the onboarding and transaction monitoring. But I think KYA is best placed within the existing AML and KYC and payment authorization flow. So there where KYC sits, this is where KYA should sit as well. So for platforms and AI providers, here's where you could kind of define or design technically what that control of the agents could look like. The identity issuance or any constraints, any perimeters could be defined there. And then also the shared infrastructure providers, there could be responsible for, sort of the registries or trust frameworks to verify agent identity or delegated authority, because there's currently no cross-network mechanism that exists to validate agent authorization before execution. And I think that is a big gap that as we are talking to the industry, we're seeing that firms are increasingly starting to look at that, but there's no operationally, there's no actual mechanism how that is done. And of course, the role of the public sector is to set the rules and play the backstop role. So, which standards can be defined to kind of have like a minimum KYA requirements, like identity standards, auditability. This liability allocation is super important. Like, where does the buck stop? With who does it stop? And then also to ensure this interoperability that we spoke about just now across jurisdictions. How do we define the standards so that these agents can operate across jurisdictional boundaries? So, one opportunity that the public sector has is to, in addition to the standards, is to the ability to anchor the KYA, the know your agent, at the network or settlement layer, because typically this is within the purview of central banks.
Thank you so much, Sonia. This is so descriptive and really helps us understand the structure better. The one thing that gives me a lot of hope and confidence is the fact that if regulators do have real-time access to these agents making the decision, and you mentioned earlier about having the human in the loop, then there is a way to be able to overcome the hallucinations that we see using non-agentic AI every day in what we are doing. But at the same time, being able to counter a little bit of that, because when the money moves, there's really nothing we can do after. So it's happening pre or during instead of post. Now, that's really interesting. And the other thing is about the networks. you mentioned like the shared responsibility between the financial services providers, the banks and other institutions, and then the private as well as the public sector having a say in terms of both the policy as well as the governance around it. So this is very, very critical. I'd love to take comments from Professor Andreas first, then we'll go to Maxim and May on the KYA piece in particular. Professor Andreas?
I think that Sonia already outlined all the main points. So there's not much that I would add here. I think there is some governance that can be implemented technically. And we are seeing these different protocols that I think also fit well together. They don't necessarily compete with each other, but they're building blocks of the future agentic payment ecosystem. At the same time, then when it comes to cross-border payments, that's when things get tricky because we don't really have, at this point at least, a global cross-border governance framework at the non-technical level. The closest we have, I think, is governing money laundering. That's where we have global recommendations by the by the FATF. But I think when it comes to just payments as such, that we need to, I think, then decide how much of the governance and risk management can be implemented at the technical, at the protocol level, especially at layer 2, and how much of it needs to be done more through traditional means of processes, procedures, committees, governance bodies, and so forth. But at least I would say that the IMF note provides a way to think about payments at these 3 layers that I think is very, very helpful to then also think about governance. But a lot more work needs to be done, and hopefully academia can also contribute to that.
Absolutely. And you mentioned the cross-border case, which is very critical because most of the impact that we will see of agentic commerce, it might work domestically, but cross-border, even in what we have with the deterministic payments, it's quite tough. And there are very few such bodies that can actually enable both the governance as well as laws around it. But Maxim, if I can go to you and then to me on the KYA piece, we hear a lot about it. I really love how the paper actually breaks it down to the point that we understand where the ecosystem needs to come and collaborate on this together. At the same time, why it's even needed. Maxim, from your side, when we think about Google and all that's being done, how do you see this playing out, and especially in the cross-border space?
So I can a little elaborate how it is currently organized in AP2. So you can think about 3 protocols are happening there. The first one is human present, and we call it the card mandate. So or its alternative is human non-present, and it's intent mandate. So either of these 2 protocols. So let's say I want to buy some amount of, when the price goes to whatever level I want to buy some pack of this water. Then the agent is going to be searching, analyzing where different supplier is providing it, and then when the price reaches the level which I want, so it's in the human present scenario, identify this, comes to myself, I say yes, I want to buy, and then the cryptographically signed mandate, card mandate happens. Then this mandate together with my goes to my payment provider, and then agent, the payment provider, is able to identify what is my preferable payment method. This agent is already done KYA on the payment provider. Let's say Google Pay is being used for the agents which are already live in AI mode in Google in the US, and then they connect, happens to the acquirer, merchant acquirer, and then the transaction this cryptographically sort of way of payment plus the card mandate, or human present in that mandate go to the payment acquirer, then approximate coordination happens with the merchants, and then the network get activated. It can be MasterCard, Visa, etc., which already have, let's say, in the case of MasterCard, special tokens to validate the transaction is happening by the agents. So this is how it is organized. Obviously, we keep looking and enhancing this approach, and there are indeed lots of additional questions in terms of the governance. We are working closely with the regulators, how to ensure that the financial stability is there, how to ensure that the agents which has passed the KYA, they're actually acting in the interest of the purchaser and not they've been built by someone else and then actually focusing for the merchant to sell more. Yes, so how to answer these all questions? We're working very closely with the regulators, with the academia, to ensure that we incorporate all those thought leadership nuances.
Thank you so much, Maxim. This is a great segue into our last segment, which is focused directly on governance and accountability, which is probably the most critical piece, especially for most passionate payments people. The one thing that's in their mind, and Sonia brought this up beautifully earlier, was about who and like what is the interaction going to be, because public bodies can only provide and follow the policy frameworks around it, but it really requires a multilateral effort between the entire value chain, which is what May was talking about earlier. So why don't we actually jump right in? And if I can take this question directly to Professor Andreas first. We've talked about the governance structures, risk committees, also board level oversight. This is right now happening. But you've talked about the cross-border payments, but imagine like the biggest question is when it comes to domestic payments, this is possibly doable with the regulator, and we've seen the frameworks or the frameworks in Singapore, Australia, EU, which have already come around. But the question is, where does the accountability set in a cross-border payment transaction? Currently in cross-border payment, there is a framework which has come through networks which have operated for like decades. But where do you see this actually taking us, and how do you think it will evolve?
It's a tricky question, because as soon as we have cross-border payments, then we are talking about different legal jurisdictions, potentially different payment networks, perhaps also a blockchain technology through stablecoins. So then accountability is kind of distributed, and the traditional way of thinking about territorial legal frameworks breaks down, or at least it doesn't provide a clear answer. However, I would argue that at a conceptual level, we're still talking about a principal agents model, where a principal, in that case an institution or an individual, uses an agent, in that case an payment agent powered by an LLM, to execute something that is in alignment with their mandate and their demands. Which means that the concept of accountability still applies, and it still rests with the principal. So whoever the principal is still accountable for the results of this payment process. But I think what's happening, and what makes this tricky also for supervisors, is that obviously the payment process happens very quickly, and it happens cross-border, and it's difficult to track in real time. So relying on post facto legal intervention doesn't really work, because I think the legal system is just not fast enough for that. At the same time, I think, Sonia and Maxim have and May have spoken about this already. We have the possibility to embed compliance into the protocols themselves. So perhaps then what we should be thinking about is how to make the technology robust and how to make it anti-fragile in a technical sense. That doesn't mean that we don't need non-technical governance models, but I would argue that in fact the non-technical aspects that are in place already for the traditional payment system can be adapted to agentic payments as long as we are able to make the agentic payment system robust enough through these technological safeguards and protocols.
I love that take. May, if I can come to you, how do you see actually this proceeding? Because what is really, I don't know how to say this in any other way, because the more I think about it, there are so many different types of payment methods, and we're not going into the tech layer at all, but rails that are getting developed, and we don't want to block out one, as you mentioned earlier. But at the same time, cross-border is just generally just so complex with multiple jurisdictions involved. So how do you see this playing out until how will consensus come around as far as this is concerned, both around governance and around accountability?
Yeah, I tend to agree with what Andre has already said in terms of the existence. So like AI itself should not be a standalone compliance or regulation. It's a how can we build on the existing one. So if you look at cross-border, that's still checks and balances. And it's those are the check balances at different jurisdictions. We can leverage, for example, one leg out, that capability to provide additional check, and this layers of check on top of that instead of building a standalone of regulation and governance. But I think that's to do that, like back to your earlier question about the holistic governance, that's a technical capability of governance. But I think that most importantly is I would say is what is the exact in the boardroom. So there's a lot of push of innovation, go fast, a lot of experiment, and without intentionally or unintentionally, something get into the production. So that's do the boardroom actually have the literacy to understand what that means, because it's moving very fast. So I think one of the governance is really about addressing that's the capability or the learning for the people actually sitting in the decision-making seat. That's one angle. I think the other one that to the very, very early point Sonia mentioned about the cybersecurity threat. So do we have the governance on that one as well to understand further? Like we see the methods model, it would just become more and more accessible. So that from the resilience perspective, do we have that? And I would say double down on the third party and the supply chain risk management, and now thinking about the correlated risk as well, not just from the concentration risk. So what the governance on top of that to have to have the agents. So agent is not one agent, is an agent behind that have a network of agents. So do we understand how far does it go in this change of agent negotiating with agents? Do we and then treat them as a third party or supply chain risk? And then I think the two part is that is yet to be determined is that how can we provide this assurance capability, assurance of like the one that Maxim mentioned about the accountability. For example, setting the limit. What is the preference of that agency operating in? What's the boundary? The consent. I think one thing that Maxim mentioned, I think consent is one area that we probably not focus enough, because consent should be a period. And how do we manage the consent life cycle through of the agent operating in our environment? That governance is key, because if you can kill the consent at the time that it matters, at the moment of truth, then we provide another layer of trust. At the end of the day, payments cannot operate without the trust, and then the trust can be very easily eroded if we don't manage the accountability in very transparent and traceable manners.
That is a very critical element as well. Actually, I just saw this is such an interesting discussion and I lost track of time, but we're moving into the very last section. So if, sorry, we'll have to close here, but I will ask a 30 to 60-second response from each one of you, because as we move forward into the next 3 to 6 months, like where do you think we will be on this topic? What will we be seeing in the world which will change as we move forward. Will anything move forward in the next 3 to 6 months when we move next? When we meet next on this topic? And if I can start off with Sonia and then I go around the room.
I think in the next 6 to 12 months, we will see a lot more new protocols. We will see a lot more new use cases. But to me, it is critical that we focus on governance, because the key principle is simple. Intelligence can be delegated, but accountability cannot.
That is amazing. That's a very critical line. Thank you so much, Sonia. Maxine?
AI economics and human-centered AI design is going to be most discussed topic within the next 6 to 12 months. And this would be covering concentration risks from the financial point of view, from stability point of view. It will be covering loyalty of the agents. If the merchant has created agents, is it the right agent for the purchaser to use, or it should be someone else who is providing agent? Should the customer themselves to be creating the agents or not? So how the whole economy is going to be evolving, because more and more adoption of agents is happening, and how these agents should be interacting with a human. So that's already seeing the big trend on this discussion happening, moving away from scaling law and all this technical discussion, more towards impact of the economy and on the human-centered AI design.
Thank you, Professor Andreas. And then last but to me.
In addition to the topics that have just been mentioned, I would like to add two that, in my opinion, need to be resolved within the next year or so. One is the delegation of mandates. Mandates are absolutely critical. So basically telling an agent what the agent is allowed to do. That needs to be linked cryptographically to the principal, but I think we also need a way to standardize these mandates. That, as far as I know, hasn't been done yet. And then I think the other aspect that I found quite fascinating as I started thinking about this and also talking to my colleagues is the macroprudential risk, but actually going beyond what the IMF discovered through the what they call algorithmic hoarding. I think there's a second order effect, a second order risk, which comes from agents interacting with agents and leading to unforeseen emergent phenomena. And I would love to, work with physicists or using complex systems theory to better understand what could potentially go wrong if agents talk to agents and there are unforeseen events just from emerging spontaneously in complex systems. But that's probably cannot be done within the next year. Maybe we need more time for that.
Absolutely. And last words to me.
Yeah, I agree. Identity, accountability, and I think that would be more use case of combining the stablecoin, wallet, and agentic commerce. Because imagine that a lot of things that can be locked out, and that could be seeing more of embedded finance through this kind of technology in the world.
Thank you so much, May. And with this, I hand over back to Camilla. I think we can go on for another hour, but I just looked at the time, we're already exceeding.
Yeah, wow. That was absolutely fantastic. I've taken so many notes, and there's so many different roads and paths you can discuss further, and so we will, absolutely. May, I love that you almost pushed and announced the next session we have, which is in Zurich during the point zero, where we're looking at the correlation between demand of stable coins or tokenized money through agentic payments. So that is just in a couple of weeks for anybody who would happen to be at point zero on the 24th. Can I ask my teammates to bring up the slides while I'm talking? So we're just going to see what's coming up. But more important than anything, the question that I'm asking myself when I'm listening to you guys talking is like, are we moving too fast? That's what I continuously come back to. We're sitting at this so powerful technology in a region that really is standing in that development phase where we can do so much to level the playing field and give access to people who haven't had access. So how do we create those systems to be fair and to be powerful for the many instead of for the few? So I think thank you all for pointing in those direction where we need to define, because if we don't define, we can't set the framework and policies to be implemented to create that uplift that we see is possible. Can we just bring up the slides, Marion? I is going to close in a second, but just so we have that for everyone to see. There is also a QR code that you can scan if you want to stay connected with us. I want to say thank you, Monica. It was a pleasure to hear how you were navigating through our fantastic panelists, Andreas, May, Maxime, and Sonia. To you who were on the line, if you have ideas and want to stay connected to this topic, as I said in KL, 16th of July, but very likely there will be an EPA working group coming out on this topic. So stay tuned. Hence, we have intensely unpacked with all different aspects from the value chain of payments to find out where are we unique positioned to shed the light and make it easier for all of us to capture this opportunity. So with that, thank you very much, everyone. We see you next time.